All right, welcome back, folks. Today, I'm going to be taking you through extra insights or additional insights on how I look at price um, when I have to engage the marketplace on a daily basis. So if you watched the previous video, I made reference to certain points, and I'm going to be talking about those without going into details. So if you didn't see the previous video, the link or the description, the link is going to be in the description, and you can go check it out. So I talked about the range in the previous video or in the previous lesson, and how I look at the range and how to study the range. And it gives you insight as to what to look for in the next price move or the next price swing. And I talked about a reference point or reference points to capture, but these things are really I'm going to switch. These things are the smaller things that you put into consideration when you understand the bigger picture. So you could actually use a reference point in a marketplace that is already bullish, and you use a reference point that gives you a bearish entry or a bearish entry in the marketplace or a bearish position, and that would really hurt you. Okay, as you would find out. But reference points are just the last tool to use or to look out for when you already understand a bigger picture. So these are just a smaller part of a bigger picture. So and what do I do, or how do I look at it, or how do I feel on a daily basis, or how do I look at price? I could actually tell you a whole lot of things, but for the purpose of keeping it short and simple, I really don't want to bore you. I could actually tell you that we had a structure here, the price broke that structure and returned in, and I could give you 110 reasons why it rallied from here. And this is the euro dollar on the 15-minute. And if you've been watching or if you've seen the previous video, I really don't like to come to the 15-minute because to start my analysis or when I talk to you, I really don't like to start from the 15 minutes because that's like starting from the middle of nowhere. Okay, I give you I described how that looks like being stuck in the middle of a desert. You need to look at things on a larger scale or a macro level. So basically, I honestly don't need to tell you all of these. Okay, price broke. There was a break of structure here, and there was a consolidation at this level. Okay, and the price declined and went down. I could give you all of these things, but it's just a story. But if you find yourself in a real life market environment, if you don't know this, you don't know it. Okay, you could actually sit there and say, well, it broke this and it broke that. Where could it return to? There are simple things, or there are other things that I put into consideration, and I just have to coming that morning, and I already know what's going to happen because I know the macro. Okay, I use the macro, and I could just tell. There's certain other tools that I cannot go into detail to talk about here. Other tools that tell you this is the euro dollar, and I can tell when a particular asset class is still bullish. So every detail will be printed on your chart, and you just need to see it. You just need to come in during that time of day. If it's London or New York, we are still bullish on the dollar, or we're still bullish on the euro, and that would really print here what you need. So the next thing that you need to do is look for really logical price levels or reference points, as you want to call them, where we could actually see price returning to, okay, as a temporary station before hitting higher prices. And one of the ways to actually identify, even if you don't know that, okay, because what I'm talking about now needs a little bit more analysis or a little bit more detail to it. It has a little bit more detail to it, and you need to do the work to look at these data or look at some of these things, or to just know that we're still bullish or we're still bearish, and we will continue to be bearish. But this is one tool you could actually use. You don't need all of that, okay? But you could actually use that. but you don't need all of that. This is how you could tell if we're still bearish or if we're still bullish overall. You could tell on a macro level. Okay. And guess what? I'm on the 15-minute time frame. Like I said, I don't like to start doing analysis or talking to you. If I'm on my own, I could do this, but I don't like to just start bringing you into the 15-minute. You wouldn't know what's been happening over the last 3 months. You need that data in order for you to identify what will come next afterwards. So if you do not have all of that, some of the tools that I just talked about, well, you don't need it, but it is really, really helpful. It helps you to do a whole lot of the work, and all you look for is you look for breaker structure. You just need price to print what you already know, and you could actually jump in and participate. Now, let's look at this rally up, okay? The rally in price, and we're not going to take this area into consideration. I'm going to mark the area. We're not going to take all of this into consideration, okay? I'm not going to take all of that into consideration. So basically what I'm trying to do is I'm trying to help you understand how to identify, how to tell where basically what's still happening on a macro level, okay? On a macro level. And I'm not using this because this right here is a consolidation. I'm going to be looking at the swing, and I'm going to be looking at the swing low. So the question is, from this swing, because it broke a structural level, and it was fast. Okay, I'm going to take it up all the way. All right. Trying to make it as perfect as I can, capture the whole swing. All right, that's about right. So from this swing low to the swing high, it took out structure. Of course it did. And look at this, it took out a particular structure. All right, but we're not talking about that. Let's talk about this. It took out a particular structure, and we saw a consolidation. That was the end of the day and start of a new day. Okay. And we saw a price decline. We saw a price decline. Now, we're going to mark that price decline. The question is, how long did this take? This is a 45 bar move, okay? 11 hours and 15 minutes. That's how much time it took, okay, to get to this top. All right, we actually identify that, okay, we have a high here, or we have, this is the topmost high of this entire swing. But I'm using the active swing with velocity. How long did it take to happen? Okay, that's the reason why I'm leaving all of these out, okay? All right, because we didn't have so much decision in price. We saw a consolidation, all right? Now, how long did this take to happen? It happened with 45 bars, 11 hours. Okay, that's half a day and 15 minutes. Okay, in half of a day or in half day, we had such quick rally, break in structure, and ended in consolidation. Now, we're going to check this decline from the high to the low. And I want you to look at that. Okay, I'm sorry, I'm using a different tool. I'm going to take that out. So that's the swing high to, I'm going to try to use that low. Okay. And this is 101 bars, 3 days, 11 hours, 1 hour and 15 minutes. 45 bars right here for the swing high with velocity, 11 hours and 15 minutes. 101 bars. That's more than 2 times this, okay? And it took 3 days. This took half a day, and this took 3 days, an hour and 15 minutes. Now, when you see judge price like this, you could actually put in your period separators, because that gives you, helps you identify and gives you more characteristics to these moves. And I'm going to talk about that, subsequently, but not here, because I'm trying to keep this as short as I can. So basically, look at this. You are trying to judge price, and you don't have some of the tools that folks have or that I'm referring to, that I can actually come in here and look at price and know that we're still bullish on a macro level. Okay, we're still bullish on a macro level, and basically I'm just going to be looking for price to print that to me, or to print that price action giving me bullishness, and I can participate. Okay, and I can look for my reference point, break in structure or break of structure, and my reference points, and I could really do a whole lot with that. I could actually counter trend because I already know I can actually counter trade against the trend because I already know the macro. Okay, I already know the higher time frame or whatever you want to call it, but the overall direction of price on a larger scale. Okay, so this took half a day to give us this price move to print this. And we saw a consolidation, and this took the retracement, took 3 days, 1 hour and 15 minutes. And if we were to judge this all the way up here, I'm going to bring, look, this moved halfway into the original um, rally up. Okay, so it moved halfway in or a little bit below half of this rally up, and then boom. You can actually go back and study this. Look at this chart and study what I'm talking about. Now, when you see a really fast move, I've talked about this before, but I'm going into detail now. A really fast move or price moving with velocity, creating a high or a swing high and retracing, or moved a move down with velocity and then retracing slowly, and rebalancing price in some way, that gives you direction. If that doesn't give you direction, well, nothing will. All right, if that doesn't give you an idea of direction, nothing will. Now, you don't have to look at all of these data out there, fundamentals and all of that, even though they're very helpful, and some of these things can really print and give you what you need to see in price, okay, in order for you to see higher prices or lower prices. And you don't need to do so much work. You just look for structures broken and trade in line with price. Now, this happened. I could actually be selling here, knowing I could actually be a seller here, because I already know that we're going to see price trade lower. And there are ways to tell how far it's going to travel to, or how far price is going to trade lower. So you can actually have a pending order right at the bottom here. It's really possible. And I've done that. If you follow me, you'd see examples of that. So you see this price trading lower, you're going to find a reference point if you look hard enough. Okay, you're going to find a sponsored candle, okay, that was responsible for breaking this high and price traded higher. These are things that a lot of you already know, so I'm not going to go into that detail. So now price traded back in here and traded higher. Now look once more. I want you to look at this. It prints bullishness again in the marketplace, and it rallies. How long does it take for this to happen? How long? Okay, let's see how long. Well, in this case, we didn't have a retracement, so this happened really fast. Okay, this happened really fast. I'm gonna remove this, and this happened 30 bars, 70 hours, and 30 minutes, as you can see. So 30 bars, 7 hours, and 30 minutes. Now, for the purpose of analysis, let's see how many hours this took. 74 bars, 18 hours. That should tell you something. All right, 75 bars, 18 hours. We had 30 plus bars here and 7 hours here. So this keeps telling you this is what we're looking at. We're still in a bullish marketplace. I could actually come in here on that day. Basically, I was looking at the market on this day, and I was still expecting price to be bullish. But there are certain things that I look out for. If I don't see that, I may not really participate in that particular price move. So right here we see this. So I'm going to ask you a question. What is this? If we see price stay here, that's a consolidation. But what is that? Is that an accumulation or a reaccumulation? That is a reaccumulation, because we're going to see a continuous printing of bullishness in the marketplace. We're still bullish. So that right there is an accumulation. So if you refine this, you're going to see a lot of entries right here. And we are in the parabolic phase of the bullishness. Okay, I'm not going to go into that, talk about that. Now let's come in here. Remember, this is the 15-minute. If you go to the daily time frame, you're going to see the reason. You're going to see the context, and you're going to see the intention for this move right here that we're talking about. But I really want to look at, I really want to start from a time frame where we operate from as intraday operators, and I really want to talk from there. I'm going to go back to the daily time frame and then look at one more chart, and that's going to be it for today. Now, and we ended the day. Let's look, start of a new day, price. We saw a quick price rally, price traded back down. I actually outlined this on the channel, and I marked all these areas because I was looking forward to having price, go above them. But there was something else I wanted to see. And if you check, I actually told those in the group to study this. I didn't tell you, I didn't say what was going to happen, but I marked this just to give them a hint, because I was expecting price to take them out. We were still bullish. We are still bullish. Now, if you do the same thing, I want you to, let's take this and let's take it to the high. Okay. How many? That's a day, 2 hours and 15 minutes. I'm going to try to make this from the swing low, a day, 2 hours and 30 minutes. And we saw, okay, I'm going to use to this area. Okay, because we saw price staying in consolidation before trading higher. So I'm going to use to that high, 52 bars, 13 hours. And I'm going to take it back and bring it to try to check how many hours it took, or how long did it take for us to see price do this. 119 bars. It stayed in consolidation. So basically what I'm trying to do is I'm trying to identify the difference in the duration of this. This right here is a tool on its own. Basically, you could use this as a tool. Go back to the last, you can actually take this to your daily time frame in order to tell what to expect. And when you do that, now I'm going to go to the daily time frame, and I'm going to but before that, let's look. Price traded back. It stayed here for a much longer period, because what I'm trying to do is I'm differentiating the duration of time taking to achieve a particular price swing before it became flat, or before we saw this, the consolidation. Okay, that's what I'm doing. So that's the reason why I'm not taking from that low all the way to this high. Okay, I'm taking to this area because we saw that was like the end of the day, and we saw the flatness in price, or the consolidation before this move up, okay, or the rally up. So this happened really fast. This stayed in consolidation for a longer period of time, and price traded higher. And so I'm going to go to the higher time frame now, and let's see what is the context behind this. Why are we seeing this? Because if we just go to the daily, or if we go to the 15-minute time frame, it doesn't do you much good. But I just wanted to give you a reason why. we had to go to the lower time frame. Okay, I'm going to change these settings. All right. So right here, if you come in here, you're going to see that the price or the market has been bearish overall for a certain period of time, and for 3 months now, and we have a high here, as you can see that I marked here. So that right there is the context behind the bullishness that you see, and sometimes it actually defies your understanding, especially when you're coming during London and you see some kind of crazy movement and you get confused. It defies your understanding because it has gone into a parabolic state. It will continue to be violent as it gets really close to these particular structure high. Okay, it will continue to be violent, and so you can actually take part in that. It will continue to seek uh counterparty, or it will continue to seek extra value at this price area. Okay, because folks are going to be this is an interest area for price, and so it will really get violent as it gets closer to that price area. So that's the reason why I said it is at a parabolic phase right now. So we're going to see price hit that area before we see any slow movement in price. Okay, this has been fast, really fast. So this gives you an understanding. So let's go now to another pair, and that's going to be it. I'm going to explain a few more things, and this is how you can actually use this on your lower time frame, even without understanding some of the tools that I'm talking about. That gives you an idea as to how the market is going to fare for the next month, or I don't know, for the next quarter. But what you need is you go back to the higher time frame, you look at that, try to understand the macro. What are we going to see? And try to understand the context. And then you can break that down into the lower time frame. Try to look for really strong swings with so much velocity, and try to ask yourself, how much time did it take to achieve that? Okay, how long did it take, especially on the lower time frame? 15 minutes, your 30-minute time frame if you are a day trader or an intraday trader operating on an intraday basis. You want to look at that. That would give you an understanding as to what to look for and how to get your reference points upon the break of structure. That would really help you. And then you could target interest points, okay? The lows and the highs and all of that. These are things that you already know. So I'm just trying to break it down and try to help you see it more. Another problem which folks are going to have is the range. I'm going to talk about that, some other time, and how to pick the range. But before we do that, now look at this price over the last 3 months. What has it been? How has it been? It's been bearish, and it will continue to be bearish so far. Been seeking out interests below swing lows, seeking out these interests. You can call that your lower lows and lower highs. These terms really confuse me, but it seeks interests below previous lows and continues to take them out. Okay, and rebalances, goes back to seek those interests and takes them out. Now you're seeing the same behavior right here. Okay, this is an interest area, and also there's a slight possibility that we could see price, react before hitting that interest area. But I'm not here to give you an analysis. I'm just here to talk about how to look at this on your own. So basically, this is the context, okay? Because now we now have, when the market creates or seeks out interest below previous lows, it creates other interest areas that remain unchecked, as you already know. So now it's going to try to take out interest below uh, the previous low. But one thing you must know is that we now have a lot of interest here. So there's going to be a shift in the macro. There's going to be a shift in the direction. At that time, you need to be able to know that, okay, we have seen a shift. Okay, the market could stay in a consolidation for a short period, as you see on lower time frames, and then the shift will kick off proper. But basically, right here, we have more reason to look for lower prices. First of all, interests below your short-term lows right here, or your daily lows right here, and we would continue to see price, tackle those interests and trade lower, and that would really give you an idea. As you see, the dollar is trading lower, the euro dollar trading higher. So that's the relationship between these two. So now I'm going to go to a lower time frame, and I'm going to end this I don't want to make this too long. uh, like I said. So now, having understood this, when you see the market do this, look at this, a build up rally. It takes out the highs. Remember what I told you. Uh, when you see price take out interest points below above previous highs, it will create interest points below, and vice versa. So now you see that it's a build up, and that's over. Remember, on a higher time frame, we've got the context, we've got the macro. We're still looking for lower prices, and so that would give you an idea when price. Everybody knows this. When price, starts to take out the previous low, you now know that, okay, we are going to look for lower prices. So basically, this gives you an idea of, number one, you understand the macro. Number two, you can come in at the time of day and look for your reference points within a particular range. Okay, and get these reference points met, and you can actually use them, because this is a short term low. It took that out. You have a range right here to work with, and you have another micro range, and price returns in there. I took a trade here, as you can see. If you go to the channel, you see that price trades lower. Okay, and takes out the previous lows, and now we have another rally up, really quick one, and boom, it starts to break down again, because the context or the logic on the macro level is that we are still bearish. Okay, this is a really sweet one. This is like some of the best. This is like one of my best types of entries to look out for when fielding on a daily basis. So basically, number one, you want to look for, if you cannot tell, because this is pretty much straightforward. We saw that we are already bearish. There's not much to explain here. You don't need to be told, but when you go back to the very first pair that I talked about, the euro dollar, you may not be able to tell. Okay, so when you're not able to tell, I really want you to do that. I really want you to check and measure. Okay, how long did it take to conclude on a particular swing? How long did it take? How long? That would really give you a really good idea on what's going on the macro level. And I really hope this really helps you. And then you can actually look for your range. When you understand that, you can look for your range to work with. Look at this is a range. It takes out structure. Okay, you can work with that, and you can capture something and look for interests below previous lows as the market rebalances or closes out on these areas. So I think this would really help you on in your trading. Let's look at this. It traded in here, and there was a shift, really fast move, and now you see a consolidation. This took a really this took longer to fulfill, traded back into the range, okay, more than 50% of that range, and then went higher. Okay, so there's so many things to look out for, because what really defines this, or what makes it easier, I'm going to say it one more time, then and that's going to be it, is understanding the macro. Okay, there are certain tools that you can actually use to understand the direction of price, and understand how much more we're going to be bullish or bearish on this particular asset. How much more? I can talk about this, and I can be specific when it comes to currencies. I'm not. I cannot talk about this for stocks. Okay, but I can talk about this for currencies. There are tools that you can actually use, and you can actually tell that, well, we're still going to be bearish, we're still going to be bullish, and basically that really helps your trading, because you all you have to do is come here and look for price to print that. In the case where you don't have information as to that, or you do not like the fundamental part of it, you can actually come here and try to figure out, and basically you would have to put in your period separators. Okay, you need to know what time of day you're looking at. Basically, you need to know that. So this is the start of a new day right here. Okay, I'm gonna try to, okay, right here. That's the start of a new day. Price trades higher, breaks structure. We take that into account, because everything happening here is a subset of what's happening on the macro level. Okay, so first of all, you need to, if you have to counter trade or trade against the trend, you first of all need to know what the macro says, or what the trend is on the higher time frame or on a macro level, before being able to do that. And you do that for a very short time. So that's the start of the day. Price trades higher with speed, takes out structure to the upside, and we see um, a consolidation right here. If you measure that, you'd see it takes more time from here all the way down than this. That gives you an idea that, what, look, we're still taking out, we're still here targeting interests at at the highs, and that would give you insight as how to operate for that day. And as you can see, this is one of some of my best type of setups. Okay, price trades back in here. If you refine this, you find what you need to take a trade here. Okay, you would find what you need. For some, I just have to look at it, and I can see it already. And right here, you have an entry, takes that out. Okay, it stays here for a while. Now, when you see this, now this happened with speed. We're supposed to see this happen with the same type of speed, but instead we saw that speed and then consolidation. It takes this out, consolidation, and boom, and it melts. Okay, it melts. And that's because you are trading at that moment against what we call an intraday trend. Okay, that's about to occur, and I kind of go into detail concerning that, because we've seen highs, we're seeing lows being taken out, and price trades back. What you traded here is a counter, or is the opposite, or you're counter trading against what we have as the remainder of the trend that should complete before we see a movement to the upside. And so this is the break of structure. It takes it out. Price returns in there. So that's what you're taking. That's what you're trading. Now, if you look now from here to here happened much. Uh, let's check it out. From here to here, that would have taken more time to complete. That's 98 bars, 3 days and 30 minutes. 98 bars, 3 days and 30 minutes. Now let's check. 39 bars, 9 hours and 45 minutes. Okay. and that's complete. All right, that was the trend and the end of that decline. So this took place. This happened much slower. Okay, and then boom, that was the end of it. And then we started to see a longer uh, trend. Okay, to take this price up here, but we're still overall we're still bearish. We're still bearish. So basically, you need to go back and study this and try to figure out or try to understand within these small ranges. You could actually work within these small ranges. And then how you do that is asking yourself, how long did it take? How long did it take for this from here? And you have to relate it to a structural level that is broken. If we had this structure and this structure and price took that out, where was the starting point of that impulse? It's here. Price took that out. How long did it take as compared to what's going on now? And that would give you direction for that day and a range to work with. And you can find your reference points that way. So I hope this helps you. And I'll see you in the next one. So until then, uh, I want you to stay safe and trade safely. Have a good one.